If you don't understand money, you're never going to make more of it, because understanding money is like speaking a language. Here is the translation that most people never get taught. Credit cards are not the enemy when used the right way. Debit cards might actually be worse. With a debit card, there is no credit building, fewer protections if someone steals your info, and no meaningful points or perks. With a credit card, if you pay the balance in full every month, you build credit, unlock rewards, and get strong fraud protection. That is how the system works. The key is simple: use credit for needs, pay it off monthly, and avoid rolling balances. That builds the foundation of wealth in a country where credit unlocks resources. Now zoom out to the bigger money picture. It is tough out there, and that feeling is real. Wages have been relatively flat while housing prices exploded. In one lifetime, wages roughly doubled while housing jumped about 9 times. Interest rates are in the 5 to 8% range. The US has a housing shortage in the millions. In some places, prices are finally sliding. In Austin, prices dropped about 30% from recent peaks, and the advice from the past does not always fit the math today. So should you own a home right now? As an investment today, the math often does not work. Renting is not a failure. It can be a smart financial decision. You can even negotiate your rent in a soft market because landlords want to keep good tenants. That is a money move most people never try. This is also when fear creates opportunity. Warren Buffett's classic rule applies: be fearful when others are greedy, and greedy when others are fearful. The Baron Rothschild quote hits even harder: buy when there is blood on the streets, even when it is your own. Look at the NFT that sold for 60 million at the peak and sank to 19,000. Overpriced hype feels great in the moment. Real value shows up when assets go on sale and everyone else is panicking. What about starting a business when cash is tight? You do not have a money problem. You have an access and knowledge problem. New programs through the Small Business Administration offer grants you do not have to pay back and loans that can cover up to 90% of a business purchase price. There are also platforms where small businesses can access debt from investors. Money is out there looking for hardworking people with a plan, and you do not need to quit your job to chase a dream. Keep the salary, build the side hustle, de-risk your leap. Over 5 years, most startups fail, but people who keep income while building have a much higher shot. With steady cash coming in, decision-making improves because panic is not in the driver's seat. Grow the side business until it covers your cost of living, then step fully in. That turns a passion project into a profit project. Not everyone wants to found a company. If you are an employee and want to earn more, learn exactly how you make your company money. Ask your manager to quantify it. If $100 comes in and the company keeps 20, show how you can bring in more and negotiate for a share of the value you create. Sometimes staying and diagnosing how to grow inside can increase pay more than jumping ship. You also gain the skill of negotiating and managing up, which compounds over time. Let's clear up another big myth. Passive income sounds magical. In reality, passive and active are tax terms, not a promise of effortless cash. Even vending machines need constant attention. Break, get broken into, and only add up when you own many. There is almost always work somewhere. The better question is whether the work fits your life and goals. Speaking of work, the hustle mantra is changing. In the age of AI, mid-level execution is everywhere. What wins now is creativity, unique knowledge, and focused sprints. Think like a lion, not a cow. Sprint, rest, sprint again. And adopt the mindset shift that prints money. Become a fixer, not a freeloader. Every big problem in a business is a profit alarm. When others complain, fix the leak. That is where value and pay live. Now for the simple investing ladder that actually makes sense. Stage 1 is you. If money is limited, the best investment is building your skills and financial literacy. That has unlimited upside and compounds for life. Stage 2 is broad market index funds with low fees. Set up an account at a low-cost provider and automate contributions into diversified funds like the S&P 500. Use age-appropriate mixes like 80% stocks and 20% bonds if younger, or 60% stocks and 40% bonds if more conservative. Diversification matters because different assets win at different times, and the goal is steady long-term growth. Here is why investing is not optional. Inflation eats cash. $100 held for decades loses most of its purchasing power. Money under the mattress is money melting. Stage 3 is private investing only when you are ready. That includes private businesses, real estate, or commodities. Options and day trading are pro tools that most people should avoid. Stage 4 is ownership. Build or buy a business so others invest in you. That is where outsized returns can live. Automate one more rule: pay yourself first. Treat investing like a bill you always pay. 10% of your income into investments every month is a powerful starting point. That one habit puts you ahead of most people. Cut the biggest wealth leak of all: looking rich instead of being rich. Influencer life is often comped. Clothes, free tickets, even paid trips. Meanwhile, regular fans are buying festival tickets on buy now, pay later plans and paying for outfits and drinks on credit. Debt that lingers for months is a bad trade for posts that last a day. Choose assets over aesthetics. Choose negotiations over noise. Choose rules that actually work. Money is not good or bad. It is a tool that accelerates who you are. Learn the language, play the game, and respect the rules. The only question now is this: will you keep playing by old myths or start making moves that actually build wealth in this market?